for everybody who's on the webinar right now, every guest of mine is in person, but there's always a guest that I let sneak in from a virtual perspective, specifically when it's someone of the caliber of my next guest. Look, there are tons of investment groups in our country, and I gotta tell you that myself, Simeon, and the rest of the team here at REC Canada are very blessed to have and be partnered with a lot of these investment groups. And they all offer different benefits, and there's pros to every single one of them. I mean, to all of our friends at Keyspire, I want to say hi. I want to say hi to our Wealth Genius friends. I want to say hi to our Synergy Mastermind friends. But the gentleman that I have coming on right now is the president and CEO of Canada's largest investment group, and the massive differentiator, in my opinion, of this investment group, which is the Real Estate Investment Network. For short, it's called REIN. It is by far, in my opinion, the investment group that is backed with the most data possible. And that data is accumulated and spoken about, but with my next guest, and that's what we're going to be speaking about. I want to make sure, because we're going virtual, you guys see the headsets, and it's the Beats. I want to make sure we brought the good stuff out today for everybody on the marathon, and I just want to make sure, do we have Patrick Francey?
Jazz.
Look at that face. How you doing today, Patrick?
Unbelievable. I'm great. Thanks, Jazz.
Well, Patrick, I got to thank you for a couple of reasons. Number one is thank you for everything that you do for the real estate community. And I mean that from the bottom of my heart. If you guys are not following Patrick on LinkedIn, which I think is his favorite social platform, but you'll correct me if I'm wrong. But I also want to really thank you from the bottom of my heart is that it's not 10 a.m. or 10:30 where you are, or 10:40 where you are right now. And so you got up extra early to join me today. So thank you so much, Patrick.
No worries. Happy to be here. Always great.
Well, look, our guys and gals that are on the webinar today, they are all over the country. And so I wanted to bring you on because as the head and the president of REIN, which just does an amazing job with all the data, I want you to speak about the Canadian kind of real estate market at a large, like what you're seeing, and then we'll kind of go back and forth from there if you're okay with that.
Sure, yeah. Where do you want to start? I'm happy to jump in.
Like, what are you seeing right across the country in terms of the current real estate market?
Well, I think there's a lot going on. You know, when you look at a high level, like you say, you know, there's lots of confusion, lots of uncertainty, lots of bad news headlines. Where I'm seeing it in terms of the investor world is there's kind of this division, if you will, of those that are just sitting on the sidelines, kind of being very fearful, very uncertain, going, I'm not getting into this mess, you know, and I've got a whole bunch of troubles. And then you've got maybe some more, I guess, confident or even experienced investors going, man, this is just the perfect time to find opportunities and to stay engaged in growing a portfolio. And many of them are actually looking at this going, finally, some opportunities are starting to show up. So it's, you know, a lot of confusion, a lot of fear, a lot of uncertainty. And what do I do? So people are, you know, confused mind says no, and many are just saying no and sitting on the sidelines.
Now, you've seen this happen before in markets where maybe it wasn't the amount of increases that we've seen, and Christopher Slatum did a great job talking about that. But sometimes it's just like maybe a new government law that came into play in a province, maybe right across the feds came out with some type of new rule. We've seen this uncertainty before. Where is it? Because I always like to speak about the fact that when there's some uncertainty, compelling buying opportunities do show up. So right across the country, really any city or province, What type of strategies are you seeing and hearing about through your membership and your community where there is some maybe compelling buying opportunities? And maybe it's not a specific property type, maybe it's just a strategy in general.
Well, the one fundamental that everybody can maybe, well, I think that most understand, but I like to repeat it anyways, and that is that real estate's regional, and so what's going on in any given city is just different. I mean, what's happening all across, when I look into Alberta, here in British Columbia, what's happening in Ontario, and then you start to break that down into specific cities. The difference between Calgary and Edmonton, for example, is different. What's happening in Toronto and some areas of the GTA is different than what's happening in, let's say, Barrie, in terms of Barrie. So we have to look, first off, break it down into what's happening regionally, and then, for years we've really said many times it's one of our kind of foundational things, is that there's no bad real estate markets. There's just poor choices of strategies. So back to your question, depending on the city you're in and depending on what's going on there economically, we start to make decisions where, right now it seems pretty blanket because of interest rates. A rent to own strategy is a really common strategy. It's one of those strategies that works if you work it. When we look at what's happening in some areas of Toronto and some of the distressed sellers that are there now, given what's happened in that market, agreements for sale can work. And there's opportunities in using that agreement for sale. But again, a more sophisticated strategy like an agreements for sale can be applied almost anywhere in the country right now, because we're starting to see distressed sellers. We need to, as smart investors, go in it and say, what problem can I solve? And as soon as they take a look and say, here's a problem I can solve, let's create a win-win situation. Many vendors, many sellers are just going, I got to get from underneath this. It's too much pressure for me. I got to get out. And then there's opportunity for investors who have a little bit of a few tools in their tool belt, if you will, that can move in and start solving that particular individual's or family's problem.
And maybe you can really just touch on how RAIN comes up with all the data. Like, where does all that come from, and why do you feel like it's so important? Because I feel like most investors don't actually take all the information. They almost make decisions kind of based on what maybe their friends are doing. They don't actually look at all the data. It's that headline reading. And so where does RAIN actually come up with all this data? Like, how do you guys get all that?
Well, so first off, we have a research team, and, we more recently are using a lot of technology, and that technology is changing the game for us in terms of what we're getting for data, real-time data. And that's just embracing AI and embracing technology. Having said all of that, Jazz, and this, I mean, you've been at it a long time as well, and you've been caught up in it the same as I have, the same as I don't know anybody who's not. And that is, for 30 years, we've been saying, make data-driven decisions, not emotional decisions. And it is hard to not get caught in the emotion of what's happening. Now, I've been in business 40 years. So whether it's been in real estate or in my operating businesses, I've been through several cycles. I've been through, I think, 4 recessions. I see the emotionality. I feel it. I've made really dumb emotional decisions, whether that be on a buy or a sell or an invest. It takes a lot of mental fortitude to not get caught in the emotion. And it takes that much more if you don't have any data to support it. So the first thing, when you look at what's happened over the past couple of years, everybody was a real estate genius and they were buying, and they're just buying everything, multiple offers, jump in, chase that deal, chase that price. And it was all emotion. And, really, when you look at a real estate cycle, that's one of the indicators that things are going to start to get bad, is when everybody's talking about being a genius. We've all heard the story, when the guy that is making 50 grand a year says, yeah, I just bought 2 pieces of real estate. Okay, you go, whoa. Okay, so now we know we have a problem, because that all is emotion driven, that momentum. And then when the actual economic fundamentals catch up to it, when things happen, when the music stops, called in this case the influencer of interest rates, man, it can really ruin everybody's day. And so rather than making decisions based on data, and Jazz, just to give you some insights into that, I mean, back in 2021, I remember I mean, many times, JG, who speaks with me often in terms of the education side of it, JG Francoeur, I mean, we're back in late, let's say the last quarter of 2021, we're saying to people, have some cash, get liquid, don't be chasing these deals. We can start to see that shift in the cycle back then. And sure enough, the challenge you face is you don't know exactly when it's going to happen. Timing, you can't time the market. You just have to start to, hone in on the data. So that's, I guess, get out of the emotion, get back to the data. We research a lot. I mean, we have a research team that does that. And as I said, technology.
Look, it's only you and I on this marathon today. There's nobody else watching. It's just you and I. So don't worry. We're going to start forecasting some stuff and playing Nostradamus a little bit. So based on some of that research, where do you see the market in the next 12 to kind of 18 months, which is the short term? And I know we speak about the long term because I know the long term we're going to be fine. In the next decade, Chris and I spoke about it. You and I speak about it at nausea sometimes on all of our social medias and our events. But in the next 12 to 18 months, where do you see this all happen? Like, and that's more from a macro perspective in the country.
Well, again, I come back to where do I see the market going? I can't, everybody kind of gives me the gears about being Mr. Alberta, but, we've been watching what's happening in Alberta. We've been talking to investors about and seeing the future of Alberta for literally 4 years, 5 years. And I remember specifically, I think it was March 7th of 2020. We did our last event in Calgary before the lockdown, but we were saying what's coming to Calgary is going to light you up. And now we knew that a lot of investors in Calgary were struggling, or in Alberta. I don't want to say Calgary specifically, but Alberta in general was struggling. But we could see that shift starting to happen in Alberta. And, now you look today, and of course, it's just gaining more and more momentum. The point of that is to say that we have to look regionally. We just have to. And so to say what's happening in real estate in Canada is a really difficult statement to kind of get to. I look specifically at what's happening in Calgary right now. I'm not as big a fan of Edmonton, although in 6 months from now, I'll take another look at Edmonton. I'm just giving you examples. I come into British Columbia. I look at what's happening in the Fraser Valley versus the Lower Mainland. Vancouver doesn't really interest me as an investor. I'm not interested in, and I'm looking for cash flow deals that are really tough to find right now in this area. So I look at British Columbia, some are going to Kelowna. I'm not interested in Kelowna. But when I look at what's happening in the Fraser Valley, Chilliwack, Abbotsford, for example, Langley, who come down the Fraser Valley into the Lower Mainland, there's opportunities in there, but you have to look. So I look at those because I'm going, what's the future of these areas? What's the future of these regions? Well, the future of these regions is economically, they remain strong and are getting stronger. They've got immigration, interprovincial migration, so they've got population growth. They've got jobs, so people are working. So that to me translates to, okay, we know that real estate will, getting in front of the real estate wave, real estate will grow from those fundamentals alone. Now I head over to Southern Ontario, Saskatchewan, and by the way, Saskatchewan, Manitoba, I'm only stepping over them because from my perspective, those are good markets. If you want cash flow, not as much appreciation. There's small population provinces. I mean, you're talking 1.3 million somewhere in there for either of those provinces, for the whole province. So to me, I'm not really as interested in that kind. Now, these are my decisions. These are how I'm looking at real estate, Jazz. So what do I want? I want a strong upside. I want cash flow, and I want demand as a as a rental housing provider. I want to make sure I got clients coming in. So then I get into Southern Ontario, I get into Toronto, the GTA, I look outside of those areas, and then I'm going to pick specific towns that I see, number one, the economic fundamentals. Economically, are they strong? Is there going to be job growth? Is there going to be technology that's moving in? Is there going to be population growth, which then keeps that demand going? Because at some point, I think, as much as we got this immigration and it seems like the tap is turned on, at some point, they're going to slow that tap down. And will that have an impact? Yeah, probably. So that's the kind of the base case for looking at it from a higher level. And then I get into the minutia of saying, well, what's being built? What are the jobs? I don't want to be in a one-horse town, And I'll give you an example of that. Jazz, as well. So I owned a lot of real estate in Grand Prairie, Alberta. I'll just use that as an example. I mean, it's a city of 50,000 at the time. I think it's even up from that. But when that oil downturn happened, Grand Prairie was all about oil, all about forestry, and it hit Grand Prairie hard. And so as much as we were, 100 plus doors, duplexes, triplexes, fourplexes in that city, when it hit hard. And it was as big as the city was, it was still a kind of a one horse town. And so that was a lesson we learned. We still did okay, and I got out of Grand Prairie, but those are really tough lessons to learn. So that's why we look at the data.
You mentioned something earlier in terms of bad strategies, something you and I have spoken about on your podcasts as well as my podcast, is the fact that Calgary, for example, specifically, the strategy of investing into a new build condo might not be the best strategy. And I want you to touch on if you still believe that now, like in the time of this marathon, September 2023. And then maybe also touch on some of those fundamentals that you look at as well when you're as Patrick Francey investing. So the question about Calgary, like what's your thoughts about the pre-construction stuff, and why, if it's not a good investment, why is it not?
So I want to give just a quick kind of, I know Calgary quite well. I know Edmonton quite well. I know Alberta. I'm born and raised there and lived most of my life there. So I know these areas really well. And I understand that what is being stepped over right now is, people hear me say, do not invest in a condo. 100% no in Edmonton. I don't care who you are. I'll tell that to my best friend realtor. Edmonton's the wrong place to buy a condo investment. If you want to live in it, go crazy. In Calgary, it's a different city and I want to say this really, culturally, Alberta is different. And so what we're seeing is, for example, Jazz, a lot of capital coming out of Ontario into Calgary. And it's like everything's on sale. It's like, gosh, I'll take 3 of those. It's like, because it's so relatively inexpensive. But here's the thing about it. Alberta is big blue sky country. It's culturally different. And that's not to say that condos aren't being in demand given immigration and the change of even attitude of people moving in. They're going, I don't know, 3,000 square foot house makes no sense to me. They come from small, dwellings. So a small condo works. But it's so important in Calgary to work with a realtor. And I say this all of the time. We pound this. Investor-focused realtors that understand the markets intimately. Being out one block, when you invest in a condo, being out one block will be the difference between having a great investment opportunity and absolutely losing money. And that's how fine that line can be in a city like Calgary when it comes to condos. So pre-construction, they look like great deals. If you're not working with a realtor that knows that market intimately, you've just increased your risk dramatically.
Yeah, because on the flip side, like in Toronto, in the Greater Toronto area, looking at a 4,500 square foot detached home, it's single family, might not be the best income property for you to invest into. You want to get more doors in that property. On the flip side, where you might want to invest into a pre-construction condo, because that is our inventory, right? Like that's what's coming up here in the GTA. So I'm glad that you mentioned that not all strategies are for every single investor, and definitely for not for every single province, city, and even in Calgary's example there, maybe not even in any neighborhood. With that said, I want to take a step back and speak about the fundamentals. What are you looking at from a fundamental perspective when you're making a decision on an investment?
Well, we could go back to what we refer to as the economic fundamentals. So we look at gross domestic product. We want to know what is the economic health of a region, of a country, of course, but of a province and even of a city. So gross domestic product, what is happening? So when you have positive GDP numbers, you actually have, which means that people are working. There's productivity. There's things that are happening. When people are working, when they have money in their jeans, they're out spending, and there's a churn in the economy. Now, when you have that churn in the economy, when you have GDP growth, what you've got going on is that people will move into that region because people need to work. So they go where there are jobs. When you have people moving into an area, then they most tend to rent for at least a couple of years, 12, 18, 2 years. Immigration wise, it's for sure in that 2 year range, because they come into the country, they may or may not have money, but they don't have a credit rating. They may not know where they're working. And then culturally, and I can't stress this enough, they got to find where their people are, where they want to live, where can they eat the food, speak the language, practice whatever cultural beliefs that they have. And they look for that. And it takes time to do that. So when you see that immigration moving into an area for those jobs, those individuals tend to rent for a couple of years until they get established, and then they buy. So all of that process then puts pressure on the demand side of buying property. They want to then move into a home. They want a place to call their own. And so they buy real estate. That puts the upward pressure on it. So that's driven always by gross domestic product, jobs, population growth.
Yep.
The demand on the rental market. So that's kind of a visual for you. Now, along the way, and this is where people get messed up, is on the influencers. COVID was an influencer. It hammered, shut things down, everything went down, and then it spiked up. That was an influencer. Politics is an influencer, and we're seeing it right now. For example, at a federal level, lots of controversy around that. Then you look at what's happening municipally and the effect that a municipal government can have. You look what's happening around what some of the decisions Ford has made, then he's changed. And then now you've got one of the things that they've done is they've changed, zoning. So all of a sudden you can densify areas that you couldn't densify before. Those are all things that are influencers. This will have a long-term effect. Will it stick? It looks like it'll stick. It's what they did in Vancouver City. Then interest rates are the big one right now. One of the largest influencers is, in fact, interest rates. And what we have to know about interest rates is, this too shall pass. It will change, right? And these are the things that show up for us. So when I'm looking at all of this, I bring this and I put a thesis together and I go, what do I see for an economic future in this city that I'm considering investing? What do I see?
Now, you mentioned the 4 recessions. I want to really hone in on that for a second, that you've seen before personally. Mm-hmm. What action steps would you advise people when there's a downturn? Like, I don't know if we're in a recession right now. They keep on moving the goalposts on what a recession is, I feel like. But what have you seen in the past that worked for yourself or your members or investors that you've spoken to, that someone can take right now in a downturn in a market that can actually help them create wealth in the next 4, 5, 10 years and beyond?
So, given what's going on at a global macro level, there's so much happening, and we all know that. And so when we look at the future state of, I guess, global economy, how that filters down, we know that the depreciation thing, what's happening in terms of inflation, what's our money being really worth, and what do we do? How do we, look at it? Now, some are just going, I'll just put it in the bank and get, 3, 4, 5% these days. Wow, that's, a huge hit. Of course, that's not accounting for inflation and really what the real inflation number is. The point is that this is the time where the whole herd is hanging a left. You got those front individuals that are not either sophisticated, not educated, they're fearful, they're running for the hills. And then that herd mentality is going, oh, geez, everybody's going left, I'll follow them. This is so, so important. This is the mental game where to step back and go, hold it. If everybody's going there, I got to stop. I want to create a financial future. I want to be solid as we go forward. And we need those hard assets, and real estate continues to be that asset that we need to own. So through this time, and I can say this from experience, yes, liquidity is important. Do not over leverage. Make sure that you're putting yourself in a position where you got some cash flow. And I know that's hard in a lot of cases. And so it depends, the guidance I would give anybody is going to be based on where they are financially, if they're pushed, and, just what have they got going on. But ultimately, if we're actually going to head into what we want to call a recession, I don't quite see it that way. But having said that, I still want to own those hard assets. And here's the thing, all those people that are going left, many of them are kind of going, I got to get from under this pressure. And that's where the opportunities as an investor is thinking it through and has a strategy, has a thought process. That's where the opportunities show up to put capital to work and to, yes, leverage that capital. And no, it's not easy. Jazz, it's harder than ever to be an investor. And, the analogy I often, there's a couple things that I like to share, and I hope it's helpful in this, is that just perspective. When you change the way you look at things, the things you look at change. And so, if you're digging for gold, if you're looking for diamonds, if you're looking for silver, you got to work. You just don't walk down the beach picking those things up. You got to blow things up. You got to dig. You got to work at it, and then it comes up of great value. And sometimes the perspective is, you've got a job. You're working 40, 50, 60 hours a week for whatever the number is, 100 grand or 200 grand a year. You're working, and then you take 2 weeks off and you made 200 grand. Real estate, you work your ass off until you get that asset in, you get it managed, you get it looked after, you get that flywheel going, and you're not working that many hours a year to generate hundreds of thousands of dollars of future wealth.
If
and
not
so
millions upon millions, right?
Yes. And so that's a perspective that, you gotta like the grind, love the grind, because it is. Sometimes it is grind.
I love that, Patrick. A lot of people say to me, wow, Jazz, where do you get the energy from? Why 5 hours? Why did you do 12 hours back a couple of years ago? It's because gentlemen like yourself and Chris Slydom and my upcoming guests make it very, very simple for me, because as you can tell, I got to ask a few questions. You guys do all the heavy lifting. And so in 60 seconds or less, if you don't mind, because my team is waving me down here. Yeah. Talk about RAIN. Somebody comes and says, well, what the heck is this investment network stuff? I don't know. Do I got to talk to people? I'm a little bit of an introvert. Maybe I don't want to meet people, whatever it may be. What is RAIN?
Well, RAIN's been around for 32 years teaching investors how to invest in real estate the right way. We don't sell real estate. We are there for education. We're there for coaching. We're there to support and do the research for you so that you don't have to do the research, to bring tools forward that you can use to grow your portfolio, take the emotion out of it, make data-driven decisions based on your knowledge and education that we provide. And we've been doing that for 30 years. A couple 100,000 investors have been through our programs at various levels. Lots of books. RainCanada.com. You can find out a lot about us. And just so you know, is that RainCanada.com, right now, we have a video program that's many hours. We just redid it. Called Real Estate Investing in Canada. It is the educational video program. It's 50% off. And so there's a great sale on. I didn't bring a QR code, bad me, but if you go onto the site, I'm sure it's there.
Okay, guys, go to the site, or if you want, just send us an email that you want to, the video that Patrick's speaking about, and the team will get it over to you. The email should be on the top right of the screen that you're looking at, which is info@reccanada.com. Patrick, thank you so much for joining me early in the morning from where you're coming in from. I really appreciate it, brother.
Yeah, thanks very much. Glad to help.
Thanks a lot again, Patrick. Take care.